Today I'm gonna talk about my trades that I took yesterday, and I'm gonna show you some more liquidity concepts. First of all, I'm gonna show you how actual liquidity works on this Nasdaq chart, because it's actually a perfect example. I told in my previous videos multiple times that there is liquidity below every swing low and every swing high, and we have to wait. As soon as this swing low and highs are ran, we have to wait to look for the reaction. So we're not looking for candle closes, or we're not looking for wicks or anything. We're actually interested in reaction. As you can see here, there was equal lows here. As soon as we ran these equal lows here, you see, we had a push in the opposite direction. Now, when did the price push? It pushed above this high here, where was the liquidity. And then when it took liquidity from there, it pushed back below. Now it started pushing up again above this high, and sweep this liquidity and then push lower. Now what is it telling me? It's telling me that there is liquidity in this area, and there is liquidity as well in this area. Why am I saying that there is liquidity in this area? Because as you can see, this price action that happened here, it reacted off of this wick here. So that's telling me that below this wick there is liquidity. And I'm not guessing this, and I'm not saying this randomly. If you go to Bookmap, I'm sure that you will see there's literally a line here that's showing liquidity, just because there is a wick reaction from that wick, so that automatically means there is liquidity below. The same way there is liquidity above this high, because you can see here order block that I just marked here. One reaction off of that order block, two reactions, three reactions. Although these three reactions actually had some internal sweeps, as you can see, the first one swept the internal high, then the second one swept that internal high as well, but overall it left the liquidity above that order block here. So you can confidently say that there is liquidity above it. Now one more important thing, as soon as the liquidity is ran like here, it leaves the liquidity block. So next time when we approach that area, you should expect some kind of a reaction. That reaction can be like a short reaction, but you should expect some kind of reaction. As you can see here, we had that reaction, boom, and then eventually we came and ran that liquidity there. And you can see here how we had another push up. These are buyers trying to defend these areas, and then boom, as soon as we got there, what happened? As soon as we broke below that area, we swept that liquidity. That's first of all. Second of all, here we can confidently say that with this price action here, sellers were induced. Now when sellers were induced, what we can do, we can go the opposite direction, because now we have enough liquidity. First of all, we grabbed that liquidity here, and then we even induced more sellers. So now, after we reach this high, boom, this is changing the state of delivery, and also area where sellers are trapped. Why am I saying it's trapped? Because all the sellers that were pressing the sell here, they were probably putting their stop loss here. And now look what happened actually next. The price went and ran that liquidity just above that order block, and then it had some kind of reaction here, which is aligned with the news. It's now 8:30. So you can see how price always go from one liquidity level to another liquidity level. Like as soon as you know which areas in the chart have liquidity, you are like at least 70% done. Now of course there are gonna be some situations where you're gonna be fooled as well. Like I'm gonna show you the trades that I took yesterday. Actually, I'm gonna show it straight away so you can understand what I'm saying. So here on Bitcoin, as you can see here, again, pretty much the same. You can see as soon as we sweep a level, there is a reaction. Then we go there. Then we sweep this internal high, then there is a reaction. Then we go up, we sweep these lows on the side, boom, there is a big sell down. And every single time we go below the low, as you can see, there is a reaction. So now, all of this move happened yesterday. I didn't catch any of that, to be honest, because if you watched some of my videos, I took a long from here to here. And then I really didn't know what's gonna happen because there is a bunch of liquidity on top as well, as you can see these blue lines here. So I was thinking maybe we're gonna go straight for them, or we're gonna reject or whatever. So as soon as we reach that area, I closed my position, and then some choppiness here, and boom, we sold like massively. And then I was like, what the hell, like I didn't expect that, but I was still open for any trades. And then as you can see here, as soon as we ran this low, I was like, are we actually gonna run from here and go back all the way up? I don't think so, because there is a very important level of liquidity here. You see this blue line that I marked? Why am I saying this is important liquidity level? Whenever you see something like this, there is always liquidity below that first low. Why am I saying that? Because for me, this is just simple price action. Every single time the price goes up, buyers are entering here. Next time price goes up, boom, retest, buyers are entering here out of some point of interest. Then price goes up, retest again, buyers are entering here, and then etc, etc. And then there is liquidity under this first one, as you can see. And this is not just one example, I'm going to show you so many of them, but like this is literally repeating so many times. Every time under this area here, there is going to be liquidity. So as you can see here, I opened first trade. Now, the first trade that I took yesterday was loss, as you can see. Why did I open this trade? I was on a 5-minute chart. Boom. So, for me, I knew that we're gonna go and grab that liquidity below. Are we gonna do it straight away? I honestly didn't know. That's why I was waiting for the reaction. So as you can see here, we had a push up, push down. We swiped that high here, and then we had push down. We reacted off of this order block and pushed up. So for me, I knew that there is liquidity below this area here. And then we started pushing down, and there was liquidity above that high as well. Now, honestly, yesterday I was impatient. If I waited a little bit more, I wouldn't take a loss, because I was rushed to take a sell here. And you see here, boom, we went up. There was a level of liquidity here left above these highs here, this internal liquidity. So we went there, left some internal liquidity, and then boom. I opened the sell right here, actually, almost at the literal bottom, because I saw that we sold. We went up, we kind of had a retest of that area, because as you can see, we swept that internal liquidity. And then we went down, we retested it, and then we rejected from that area. I was like, okay, cool, like this must be a sell now, and we're gonna go and grab that lower liquidity. But what happened actually is that the price went down, it took some internal liquidity, again, it reacted off of this order block or whatever, I'm not really sure, and then pushed up. Now, my stop loss here was a bit too much, to be honest, because I went for a football game. So I put the stop loss here, and then I put my take profit here below that area. And I didn't really want to think about it. If I was on the chart, like if I was watching this trade on the chart, I would close it here as soon as we reach this level, because as you can see here, the sellers were induced, or I was induced, and then we had a change of state delivery here. Boom, we had a change of state of delivery, retest, and then we pushed up. As you can close the trade as soon as it reaches this level here, because there is internal liquidity. The price could grab that internal liquidity, so you could have this change of state of delivery, grabbing and then push down. That didn't happen, obviously, because you can see here, we grabbed that liquidity, we started consolidating, and then boom. As soon as this candle opens here, or this one closes, you should close there. There is no reason for you to wait more and put your stop loss that high, because you can obviously see there is liquidity here as well. I put mine there again because I was not at a chart, so I just didn't want to risk it, because I was like, if I put it here, they could be like 1 week and I could be stopped and the price goes down. So I was like, I don't want to miss that. So as you can see, that was my first trade. And then we pushed up to some area, whatever. There must be some point of interest or whatever. You can see it's a break and retest maybe here, whatever. And then what I did is I left the notification, the alert, I left it around this area, because I was like, okay, cool. If we want to go all the way up, cool. I'm not interested in buys anymore, because I'm not sure how high we go. But if we come back to the same area that I previously opened the short, around here, I put it, I'm gonna sell again, because now we already grabbed some internal liquidity. So now I'm 100% sure that we're gonna go down. And that's exactly what happened. So we went all the way up during the London session yesterday, if I'm not mistaken, exactly. And then as soon as New York Open, it started pushing down. And then we reached to this order block here. Now I knew that all the reactions here that are gonna happen from this POIs are gonna be false. So I managed to have a little bit better entry, because as soon as I had this candle here, I entered here before that candle closed. I put my stop loss above this area. It could be here as well, or here, doesn't matter. I was just looking for 1 to 2. And then again, I targeted that level that I talked about before. And as you can see, again, this is literally what I'm saying. As soon as the level is taken, the level of liquidity is taken, there is a reaction. And as you can see, now we are literally buying. So as soon as every single time the level of liquidity is taken, there is a reaction. As you can see here, even here, there was a reaction. It was not a long reaction, but it was like a short-lived, but still there was a reaction. So yeah. And now this, I'm not sure if I'm gonna cut the video here, and that's why I want to talk about psychology of trading, and actually what was stopping me for a long time from actually making money in trading.